Okay, everybody, welcome to the webinar. As you know, my name is Walter Peters, and I'm from fxjake.com. Today we have a great webinar. This is going to be probably one of my favorites of the month. Jorge Espinoza is a trader in South America, in Colombia, and he is absolutely one of my favorite people. I love people who really go after what they want, and what you'll get out of Jorge is his enthusiasm and he has a real balance in life, and he's going to show you how he balances his trading with his life with a very simple system that I talk about in the Daily Trader. If you don't know about the Daily Trader, it's a program that's I consider to be one of the cheapest and best Forex education programs available. In the program, I offer a video every day for 365 days, and we have two other traders besides myself who post trade alerts. Well, one of the systems in the program, Jorge took by the horns and has really done well with it. Over the last 2 months, he's made 2,410 pips trading the 2E trading system. And that's what this webinar is all about. So what I'm going to do now is introduce Jorge. Again, he's a really great guy. He has lots of enthusiasm, and I think you're going to love the way he trades this system. It is a trend-following system, and there are indicators that are set up to allow you to take very simple trades. The trades are actually based on price action. So the trigger itself is a price action or a naked Forex trade. But there is an indicator on the chart, and that's just to help you follow yourself out of the trade and really milk it for as much profit as possible. So what I'm going to do now is turn over the reins to Jorge and thank him for spending time here today and showing us exactly how he does what he does. And so, Jorge, I'm going to make you the presenter.
Okay, perfect. Hi, everybody. I'm Jorge. I'm really glad and honored to be here in this webinar about the TUA system. Thank you, Walter, for inviting me and having me here, just sharing my knowledge and what I have done with this system. That it's pretty amazing. I'm really grateful with you because of it. So thank you very much, and thank you everybody for being here. I know a lot of you are kind of early in the morning. Some of you are pretty much around 3 or 4 p.m. as me. So thanks everybody for spending time here with Walter and me. So everybody can see my MetaTrader chart or platform right now.
Looks great. Looks great.
Looks great. Okay, perfect. Perfect. I like that. Okay, so, well, I'm going to talk a bit about me first. It's just like a fast introduction. I'm Colombian. I have been trading for about 7 years now, and I'm a hypnotherapist. I help people through hypnosis to achieve goals, to get things they want, to get rid of phobias and stuff, and I have worked a lot with athletes, helping them with peak performance, and I have mixed my life with all this knowledge I have from hypnosis and live with balance with my trading career, and I have get great results. So well, that's a bit about me. I have pretty much, I think, the story as a trader. I start with X amount of money with my first account. I blow it up really fast. I start jumping around from one system to another. And, well, finally I get another system that really works to get in my arsenal, that it's the TUI system that I have been using right now for about 10 months maybe, I think. I think I've been using it for that much right now. So well, that's me. Now, I don't know if you saw me in the picture at the beginning. That's me. And well, we're going to start. I would like to talk about the TUA system first. The TUA system is a system composed by two exponential moving average. I think that's why it's called 2E. But the one that can confirm that it's Walter because it's his system, but I just assume it's
Yeah,
that.
yeah, that's right. You got it.
Okay, perfect. I wasn't wrong then. So it's composed by two moving average, exponential moving average. One, it's a 6 exponential moving average, and the second one, it's the 21. Here in my chart, the blue one is the 21, and the 6 is this one that changes colors when it turns up or down. It's an indicator that you can download at nakedforexnow.com, the forum that Walter's owns. So you can get it there, and it's really cool system. It's a really easy system to follow. You just have to go with finding trends by the cross of the moving average and start looking for setups to go in the direction of the moving average. Am I right, Walter?
Yeah, that's right. It's basically set up for exactly what you said. The idea here is that we want to hook into a trend, and one of the clues that we have when we're in a strong trend is that trigger for the 2E system that you're going to talk about right now. So the moving averages show you that the market's sort of going in one direction, and then we wait for that one trigger, and when we see that one trigger, we get excited because we know it could continue. So that's exactly what I would say. So I think we're on the same sort of page. Yep.
Okay, great. So this is a live chart of the euro dollar, and I want to explain how it works. Sometimes when you're going to start looking for a trend, you want to avoid this choppy market, as you can see sometimes. I do that by not trading the first trigger after the first cross. What I want to mean about it. You can see here it was a cross of the 6 and the 21 going down. It came down here, started bouncing around. Right here was the first cross up for the market, trying to say that the short trend maybe was over. But one cross is not enough information for me, so sometimes I'm going to wait for the second and third cross, or maybe the second or third setup to trigger my trade or to enter a trade. Why? Here you can see price came down again, so it starts showing that maybe that wasn't a signal to go long. Here it goes again up, failed, and the first time it crossed with these two big candles, and here it prints an inside candle. What do you look to trade the TUA system? You're looking for an inside candle after a move away of the moving average. So these two green candles came up, the moving average get wide, and you know that now the trend starts to going up because it was kind of the third cross in a really short period of time trying to go up. So it shows kind of strength. So now that we have an inside candle after that move, what we look for, it's for the break of that big candle. Not the inside, but the bar previous the inside bar. So this trade was set with an order buy stop here at the top of this candle. Maybe you should add the spread and a couple of pips just to go a bit savior, or you know, not risk that much. Your stop loss would go in the other side of that big candle, and your target will be the same amount of pips. It's a 1-to-1 risk-reward ratio trade. So you go, this case, about 78 pips. So 78 pips would be up here, pretty much there. So you set up your order there. Price came up, broke the level, the high of this green candle, and went straight up for our first target. So that's pretty much how it works. you try to identify the beginning of a trend and then start following that trend with those inside candles. As you can see, after this bar touches here our first target, we had another inside candle right here. So same thing, there was a buy order up here with a stop loss right here, and you started waiting for it to triggers. Normally, one of the rules is that if price goes and touch the stop loss before triggering our trade, it cancels. So this one was a no-go. It started going again, print another inside bar, so it shows another setup right here that this green candle triggers, came up, pretty much took right up here the profit, and then prints another inside candle right here that shows another entry. Maybe it wasn't valid because of this low. Let me check. 1.3004, 06, because about 2 pips. Sometimes I'm a bit flexible with that because it wasn't like that much lower than the stop loss before, so maybe I would left my order there, and as you can see, price came and trade higher. So right now we can say that on the euro we are starting a new uptrend because we already had 3 two-system profitable trades. So maybe now we're going to keep going and going and going for a time. I'm not going to say a long time, but for a time. So the idea is to get those trades and those signals to get higher and higher and be profitable, going long on the euro. So that's pretty much the basics of the two-way system. I don't know if you, Walter, want to say something else about the basics.
Okay, this is great. So I just want to confirm here. So you're basically waiting for a cross of the moving averages, but you don't like to go on the first cross. So in other words, down at the bottom of your screen there where you see those choppy moves, you're trying to avoid those, aren't you?
Yeah. I'm pretty much trying to avoid those.
Okay, so why did you decide to get in at the first arrow? Why was that a valid signal for you?
Because on a short period of time, let me highlight that with insert shape rectangle. If you can see, here was pretty much like the choppy market. In this short period of time, you had 1, 2, and 3 crosses trying to go up. So this one actually wasn't like the first cross in this period. It was the third one, and it came with a lot of strength. It broke the high of this first and second tries to go higher, and it goes up again. So now for me, he was saying like, okay, this third cross, it's stronger than the previous 2. I think this is going to be a runner. So that's why here I decide to go on this first signal or setup after this big move cross, because it was after the third cross of the moving average in the last period of time.
That makes sense. Can I ask you something else? So you mentioned that so on that first signal, we see where our entry price is around 29.52. And our stop loss is at 28.74. So on that trade, if the market had come down and traded at 28.73, 1 pip lower than your stop loss, before it triggered your entry at 29.52, you would have canceled your order. Is that correct?
Yeah. I would cancel it as a two-way system. Maybe I would look for another setup because if you can see now, these highs here, these lows, shows that the 1.2870 level, it's pretty much a really good support resistance level. So I would look for another thing there, but just because it trade there, I would cancel it as a two-way system trade. Yeah, I would cancel it. Can you hear me? Hello?
Hello? Sorry.
Yeah.
I
Don't worry.
I mute myself so that I'm not, you know.
Okay,
Yeah,
yeah,
yeah.
no problem.
Okay, so you had that trade, and that one's great. It works out. It hits your target. And then you have the next setup, which is that red candle inside of the green candle right there. Yep, that one. Now,
This one?
Yep. Now that one you actually canceled, didn't you? Because the market fell lower than where the stop would have been.
Yes.
Right.
It opened with that small gap and it opened here with this gap and trade higher, but it was lower than our stop loss, so I cancel it.
Yeah, so you stick to your rule, which is close the order or cancel the order if the market goes to your stop loss level before it triggers the trade. Right.
Yes.
Okay. All right, and then you get another signal immediately right there with that little tiny candle.
Yes.
And that
Yes.
one's great because I'm not sure if it would have triggered your stop. It looks like it may have come close to where your stop would have been, but it probably went down lower first and then went higher later.
Yeah, I think it came down for 1 or 2 pips. I mean, it's weird to tell, but sometimes when you have this setups, you know that the price come and touch your stop loss before triggered your trade. Pretty much it will show another trade later. You know, like it means that it will get another inside candle later.
Wait, say that again because I think that's really critical, Jorge. You say if the market comes down, if the trend is intact, in other words, right? So you're saying basically you're saying if the trend stays true and it keeps going in our trending direction, and the market comes down and hits your stop level before it triggers the trade, you will often get another setup. Is that right?
Yeah, that's right. That's right. So here, for example, the low of this green candle was 1.29685, and the low of this one was 1.29675. It was exactly 1 pip. Sometimes, depending on the chart, you know, like right here, you can see that 29.55 level was pretty much like a good support resistance level. And I'd see that price came down there and went up. It's telling me something. Sometimes you're not gonna avoid a trade because of 1 pip. You know, sometimes it's like your sense of that like trader god that will tell you like don't cancel it because of 1 pip. Sometimes it's gonna go and blow your stop loss, and you will say like, okay, blown my stop loss, I cancel it, and I will show you an example right now. Sometimes because of 1 pip, it depends on your style of trading. You know, some people will say like, I'm a bit aggressive, I'm gonna give it 5 pips. If it goes more than 5 pips, I will cancel it. If it doesn't, I will just leave it there. But right now, we can say that, okay, we can cancel it because of 1 pip, but it was a small, you know, like it doesn't penetrate the stop loss. Let me show you an example of, I think it was look, for example here, this is an Australian Aussie chart. Here was a setup right here to go higher, never triggered, came, penetrate our stop loss, came and touched the 21 moving average, printed bullish. Actually, this is a big shadow of the 21 moving average. So I can do two things. Wait for this red candle to see if it is an inside candle and go with the break of the high of this big shadow, or keep for another inside candle a bit higher. Sometimes that happens if price touches your stop loss and doesn't break the 21 moving average. That you can see it works really nice as a support resistance moving average. It means that you're gonna probably have another setup in a short period of time. So I'm expecting to have in the next day or 2 days, you know, like 6 to 10 next 4-hour candles, another inside setup right here.
Yep, yep, that makes sense. And
so sometimes
yeah.
I just cancel the order. Sometimes I leave it on. If you can see here, it penetrated just for 1 pip, and it was far away from the 21 moving average. So, and that was really stiff. So it was saying like the trend, it's getting stronger and has a lot of momentum. But if you want to cancel this one, it doesn't matter, you know. That's what I'm saying. You cancel this, you have another setup right here.
Exactly.
Same thing. The low here was 29.91 4, and the low of this one was 92.5. So if you cancel it again, okay, you cancel it. It doesn't matter. 1 pip was okay. Then you have this inside candle right here, and this one triggers perfectly without touching, I think, unless this one was 30.04 and 30.06, you cancel it too. So that's why sometimes I would give a space of a bigger than a pip or 2 pips of penetrating my stop loss, you know?
Right. That makes sense. Also, we should mention that the 2E system also does really, really well at milking big profits because of the 6 moving average, the 6 EMA. Can you talk a little bit about the trailing exit too?
Yeah, that's the second part of the 2E system. That it's the second exit. For the second exit, you go for a trailing stop till the 6 moving average turns to the opposite side of the trend. For example, right now, let's say that we were here in the market, right here. You can see we were in a downtrend. Price came, touched the 21 moving average, was here, and right here, oh, sorry about it. I was trying to zoom in. Sorry about it. For example, right here, you get this small, tiny inside candle. After failing this first cross to going up, so it says that trend will go lower, try to go lower. You went lower than this lows, print this lower candle, and we can say that we went short right here, targeting pretty much right here. So here it was our first trade. It got the first target here, and you close there, you move your stop loss to break even, and you wait for the second target to touch your stop loss or to the 6 moving average to turn up like here when it turns from yellow to green. So when this happens, when this bar closes and the 6 moving average confirms the turn up, I would close my second size or trade for 20 pips of profit. It was a small profit, it doesn't matter in this case. But look what happened right here. Right here you have another setup, this green inside candle. So you wait for the break of it, right here with the stop loss right there and your target pretty much down here. Target came up, never touch your stop loss level, came down again, triggered, retraced a bit, came all the way down and touched your first target. After that, you just simply move your stop loss to break even and start waiting for price to go. Right here, it goes, prints a up candle that make the 6 moving average turn up, so you close your trade there. So the first target or the first trade grab 73 pips and the second one grab 63. But there at that moment, look what happened, another inside candle. So when you trade was here with the stop loss here, and the target pretty much down here. And look, next candle, it triggers, came back, haven't touched your profit target nor your stop loss. You're still waiting, boom, it touched your first target. When that happened, you move your stop loss to break even and wait for the 6 moving average to change. Happens immediately. So that's the way you use it, like to get a second trade, to ride the trade. Sometimes it can go for hundreds of pips. That's what we're looking on the second trade. Sometimes it just bounce and break even you or pretty much close at the same price. But that's what's really good about this system, that you can ride the trend for a long time, and you will find a lot of trades. You know, here we have 1, 2, 3 profitable trades just riding the trend with really good amount of pips each. So that's what we look for.
Okay, we have a lot of questions here, Jorge.
Sure.
Okay, so some of the things that people are asking are, for example, if you're in a trade and you haven't hit your first target, so everyone, just to recap here, there's basically 2 exits on every trade. Well, first of all, your stop may be hit. If the market's not going to go off in the trend direction, you may get hit on your stop, which I think for you, Jorge, it's about a third, 40% losers or 39% losers and 60% winners, around there?
Yeah, it's pretty much like that.
Yeah. Okay. So
60% winners.
60% winners, 40% losers, and then what happens is your winning trades. Your first target is a 1-to-1. So if you're risking 50 pips, you go for 50 pips, and then you use that trailing exit on the other one. Now, there's no guarantee that the trailing exit is going to give you a lot of pips, but it will occasionally, and that's really where you add to your winners in this system, is that by being patient and waiting, you get these big winners. Now, one of the questions I have is, if you're in a trade and you haven't hit target 1 yet, you haven't hit your 1-to-1 target, you get another signal. Do you take that signal?
No, because that's putting more risk pretty much on the same trade. So think like you risk the amount of risk you are willing to risk for each trade. I risk 2%, and if I haven't take profit from the trade and I just add another trade, now I'm risking 4%. Once I get profit target and I lock some profit and move my stop loss to break even, then when I add another trade, I'm not risk free, but it's only risking the new trade because the older one was a winner and was locking my profit. So I'm not going to add risk just wondering if price are going to hit my target, you know?
Yeah, that makes perfect sense. It's exactly how I trade it. So when I'm waiting, I will add a position, but my first position has to be at break even, and then I will take the next one. Yeah, is that what you do?
Yeah.
So
my first one closed 50% at the first target. So actually, I already have 50% of my trade, you know. So if I risk 2%, I already locked in 1%. The other half, it's moved to break even. So then if I have another setup, I will add. Because if I add another 2%, what it says is like, okay, if it comes back, actually I'm only losing 1% because I already locked 1% from the previous trade of the same trade.
Exactly. Yeah. Yeah. It's a great.
So
Yeah. It's going to really accelerate. So when you have a strong trend, you're going to really do well, obviously, because you're going to keep piling
yeah,
on winning trades, and your trailing exit's going to help. But when you have choppy market, it's not going to do so well. Now, do you
yeah.
completely ignore support and resistance zones? That's a question that's come up.
No. Actually, that what I was saying about the other trade. For example, here's like the no, not this one. I think it was the Aussie or the pound. Let me check. Look, for example, here in the pound, I have also this trade here that never triggers. It came all the way down, blown up my stop loss, bounced on the 21 moving average, but look at this. That place of the moving average was pretty much this support resistance zone. You see? So at that time, this was a really small kangaroo tail after this big candle that it works. I didn't trade it because it was too small for me after this move, but look how it prints that out of that zone. And let's check if that zone was, look here. Let's move to the line chart. So it was a band here, 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 here. So it was pretty much a good level, you know. So I don't ignore it, but I just trade them with another strategy. I don't mix strategies. I will mix them. For example, as I did on the Singapore dollar from last week. That trade was right down here. It came, it triggers, it bounced, it came, never touched this stop loss, bounced on the 21 moving average, came down here, never touched the stop loss, came at the target, sorry, came back, bounced again on the 21, came down, and when I see that it prints this kind of whammy or double bottom, I decide to close part of my trade because I wasn't reached my target yet, and now it was showing a reversal pattern. So that's the way I mix with things, but I don't avoid trades that much because of a support or resistance level near the target or before the target or something like that, you know? Am I clear? If
Yeah.
not,
Yeah.
please tell me, because English is not my first language.
No, no,
So
that's very clear. No, this is great, Jorge. This is brilliant. So, here's an interesting question from Andy, and let me know what your thoughts are on this. Andy says, does it not make the trend more valid if price retraces to the EMA or to a support and resistance zone and then bounces back into the trend? Would the stop loss be better placed behind the EMA or the support and resistance zone to give it more meaning? In other words, Andy's looking to slightly modify the 2E and say wait for a retracement and a bounce. I think my answer to that would be that, that's a little bit of a different system than what we're talking about, because what we're talking about is a strong trend, and then we're waiting for that pause, and that pause is identified or marked by an inside candle. But what do you think about that idea that Andy says about waiting for a move back to the moving average or a zone?
the thing is that moving average work as a support resistance as a 21 does, but look, for example, here, let's say that we have an handle inside candle here, another one right here, another one right here, and pretty much all of those trades were profitable, you know? So if I was only waiting for price to touch here, I just didn't get all these 3 trades. So when price is far away from the moving average, it will take some time to touch it. And between getting there, it can show more trades, more 2E opportunities.
Yeah, that makes sense. Yeah.
So I will not do that. And also, if I trade this inside candle here, the stop loss up here was pretty much okay. If I go and put my stop loss above the support resistance level or the moving average, that will enlarge my stop loss, so I will get to enlarge my take profit to make it a 1-to-1 risk reward ratio on the first target, you know? So it works really good on
Yeah.
those highs of the previous candle.
Yeah, so I mean, I think it makes sense what you're saying, because essentially you want to make it easy on yourself to get to target 1, and so by using the previous candle, the large candle, to set your stop loss, you make it a little bit easier on yourself than if you were to use, in most cases, if you were to use the moving average, it's going to be a much wider stop. So you might not get stopped out as easily, but it's also harder to get to that 1-to-1 reward to risk
Yeah.
ratio. Yeah.
And also that's the advantage of using buy stops or stop orders, because for example here, if price had the strength to break this high, it's pretty much trying to say that it can get going higher because of the strength of the trend. It wasn't able to. It came and touched first the moving the stop loss. Okay, but I never got into the trade. So if I put this one up here and my stop loss down here on the 21 moving average, it would become a really huge trade, pretty much twice riskier than I was taking, you know?
Yeah.
So
Yeah.
it's part of saying if price has the strength, enough strength to blow up this high, it's not, I mean, it's pretty much a high probability trade to get to target than to get blown the high and go all the way back to your stop loss, you know?
Yeah. Yeah. Exactly.
So I would not trade like that, and I agree with you. It would be a completely different system.
So let me ask you, Jorge. You use Alpari as your broker. Do you know when your candles close? There's a question here about, so your daily candle, does it close at 5 p.m. New York time?
Yeah, right now 5 p.m. New York time, 4 p.m. Chicago, because right now I'm with Chicago time, and the other time of the year I'm with New York. So right now I'm with Chicago, and it's my 4.
Right. So it's going to close for you in about 20 minutes, I guess. Your daily candle's
Yes.
over. Yeah. Okay.
Yeah.
So the other question that keeps coming up here is that people are asking, why do you trade the 4-hour chart? Basically, you trade the 4-hour chart and you look at a lot of currency pairs, right? Like I think over 20 currency pairs, and you will get about 1 trade per day on average. Some days are going to be more busy, some days are not going to be so busy, but is that fair to say that that's about what you get?
Yeah. For example, yesterday I had 4 trades: Aussie Swiss, the Australian, the Euro Australian, the Pound, and the Swissy, and none of them triggered, you know? But I had 4 setups. Half of setup doesn't mean that the trade will trigger. So sometimes I will have a lot of setups, but none of them triggered. Sometimes I will have a lot of setups and all of them will trigger. Sometimes I will have a lot of setups and some of them will trigger. So yeah, I think in average I have 1 trade a day pretty much. And I like the 4-hour because let me live my life, you know? Like I just have to check my charts every 4 hours. And I have the rest of my day to do my hypnotherapy, and I can go to work out at the gym, and I can go and hang out with my friends and just keep looking for the charts every 4 hours. And also I have found for myself that there's always going to be a possible trade, you know. Uh, but I'm a person, I need to do some other stuff than trading. I need to rest, I need to sleep. So I don't trade during London Open and first hours of the day, you know. So I pretty much don't see or don't look at my charts at midnight nor at 4 a.m. because I'm sleeping and I need to rest. Because if I try to wake up every 4 hours to check my charts and to become slave of my charts, in 2 weeks I'm going to be a zombie and I'm not going to have the right mindset to look at analyze my charts. So if there's any setup that triggers during the London opening or 4 a.m. or 4 in the morning for me, it's going to be simply a no-go for me, and that trade wasn't for me, you know, because once I said, like, you have to trade for living, not live for trading.
That's awesome. Yeah,
And,
I mean that's
and
yeah, I mean, that's great. I'm glad you said that. That's great. You don't. So you basically are saying you miss 2 4-hour candles every day. Is that right?
yeah, yeah. And sometimes, I mean, if there's 10 p.m. for me and I know that market it's gonna close in 2 hours, and I pretty much look at my chart and I know, because sometimes you can tell if the candle it's going to close at it as it is right now, and I can tell that that candle would be or will be an inside candle. I can do two things. I can wait for 2 hours awake and set my trade there, or be a bit aggressive and put my sell or buy order right there, assuming that that inside candle will not trade lower than my stop loss nor higher than my trigger, you know. So sometimes you can tell, like, okay, look where price it is right now. It's the end of the Asian session. There's no news. There's no nothing. I don't think price will move that much until London's open. This candle will pretty much close like this. I can set my order right there.
Right. Okay. Cool. That makes sense. Um, Excellent. So you're basically saying, look, the reason you don't trade the 1-hour charts, for example, is not because you don't think that the system will work on the 1-hour charts. It's just because you want to have a lifestyle where you're not basically a slave to your charts, right?
Yeah. Well, I haven't tested on the 1 hour, so I'm not sure if it works or not, and I'm not going to sell if it does or not because I haven't tested, and that would be wrong for myself saying that it doesn't work. But you can test it. The thing is that, yeah, what you just said, I'm not going to trade it on the 1 hour because that means that every hour I will need to check my trade to see if there's an inside candle.
Yeah, exactly. Yeah,
So
yeah.
I mean, I watch my charts 4 times a day, maybe 5, and then I will have to go and check it about 20 or 18 if I sleep only 6 hours. So it's a no-go for me.
Yeah. And so how long will you wait? Nick, Jeremy wants to know, how long will you wait? So you have this trade, you put your order in, and it doesn't trigger. How many candles will you wait before you finally say, oh, it's just not going to get there?
No. If it touch my stop loss, I will do that. If not, pretty much if it doesn't get nor your stop loss or your trigger level, that means that all those candles in between still being inside candles or of the first one.
Exactly. So in other words, the market's still resting, and you still could get an explosion any
Yeah.
minute. Yeah.
For example, like here, this red candle was the signal. You know, there were like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles until it touched my stop loss. All these 9 candles still being inside candles of this one. So in every moment or any moment, it could just go and pop up.
Yeah, exactly. Exactly. So
you know,
you just
for
wait.
example,
You just wait.
it happens today. It happens today here on the Swizzy. Here was the inside candle. It came in inside. Here you can see that you had another inside candle right here. This one never triggers. It prints another one, big red candle with a green inside, and it never triggers neither. So it went all the way up to the stop loss. And look what I said about being kind of flexible of it. This stop loss was really close of the 21 moving average that works as a support resistance. It only penetrated the stop loss for 93.65 for 3 pips. After that, it prints another inside candle. I didn't like that inside candle that much because of the 6 moving average pointing up at the moment. But look what it happened. It just blow up right away there. So if you would trade this one, 38 pips, it came pretty much 50%. I'm not saying that it's a winner right now, but it just blown up. It haven't, or maybe just triggered the first one, but it will see what happened, you know. But I want to show it that all these candles were inside candles of the first one.
Yeah. So okay. So let's just and you haven't tried it on the daily chart. You're only trading the 4-hour chart. Is that right?
Yeah, I have only tested in the 4 hours. For the daily, I use other systems, View and some other systems, but not this one.
Okay. So and your average winner is slightly bigger than your average loser because of the trailing exit. Is that right?
It's slightly. Sometimes it's pretty much like the same, because sometimes, I mean, when you lose with both trades, you know? When you lose all your percentage, the 2% or the 3%. When you win, sometimes you only win half of your percentage. If profit one went and touched it and you close that, and the other half close it break even, or the only half close not as good as take profit one, at the end it's going to be pretty much really the same number because of that.
Yeah.
Numbers will going to change when you get a trend, a really high trend, but because of the 60% winner, 30% losers, and the difference between losing all the risk and winning sometimes half of the risk, some other times twice or 3 times the risk, it will go pretty much as the same.
Right. I think what will happen is, because there's a lot of questions about this, I think you're right. You're absolutely spot on. What I've noticed is that it is about 1-to-1, but the longer you trade this system, the more your average winner will increase. Do you know what I mean? Because you're going to get into these really lucky trends. So, for example, if you trade this system for 2 years, you might say, oh, you know, my average winner is, you know, $205 and my average loser is $204. Okay, so it's about the same. But if you trade it for 20 years, then what happens is, because you get so many exceptional trends, like look at that one. What was that? That was the euro yen, right? Yeah. You know,
it was a euro yen.
Yeah,
so
I mean,
for example, here,
yeah,
the inside candle was right down here. And that's what you have to think sometimes, you know, like this one was the first cross, but look how hard it crossed, you know? Sometimes you can see that price tries to cross with not that much strength, and it came back, and it came back. Look how these 2 consecutive candles went up, you know? It's normal to see a pause in the market after this big move. So it's nothing bad to go long with this inside candle. Because if market's going to fail after this big tail and this red candle, it will print pretty much another red candle, and I'm not sure if that's called like an evening star or something like that on the candle language. I'm not as good as some others in that. But look the strength that it has right here. It's saying price was going like tighter and tighter and tighter and tighter and not moving anywhere, saying like, hey, the next move, if it goes hard, it will explode. And price just when it crosses, keep going, pause, and look. You get here this trade for about, what's this? 230 pips. So 230 pips will be right here. 25 to 10. Pretty much right there. And look what it happened. It came all the way up, touch your target, you move to break even, keep going, 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 and it haven't changed the color of your moving average. So right now, it becomes a 1-to-1 to a pretty much here it's a 2-to-1, and right here you're pretty much at a 3-to-1 trade. And here you have this inside candle right here.
Yeah.
So you add with another trade here, and it keeps going.
And that trade would have canceled. That trade would have hit the target, I believe. It would have been really close.
Let's see. 120, 100.
Yeah.
Oh, yeah, it does. 150. It does.
Yeah. Yeah, so here's the thing, guys. If you're trading the system, not every trade's going to look like this one, obviously, but the longer you trade it, the more of these you will collect, and the more you will increase your alpha. So this is really what it's all about. It's not for everybody. It's a trend system. So if you like taking huge chunks out of strong trending markets, this is for you. If you like reversal trades, this is not for you. It's a kind of system where it's only for those people who have the patience to sit through 4 losing trades, 6 winning trades, and of the 6 winning trades, 4 of them end up being okay. One of them ends up being exceptional, and the other one ends up being pretty good. You know what I mean? That's right. I mean, that's what happens, right? Would you agree with that, Jorge?
Yeah, absolutely. Absolutely.
So,
look, for example, this rides on the Pound Aussie. Pound Aussie, it's a really trendy pair, so you can get like all those really good things like an inside candle and just see your price riding down and giving you more and more entries, So it works better in trendy pairs. Look this. You can catch all these inside candles right here, going and going and going.
Yeah. What are your favorite pairs? You have some favorites on this one?
I like the trendy pairs, Pound Aussie, Pound New Zealand, Euro Aussie. That it's are pairs that when they get into a trend, they will run. So I like that.
Yeah, cool.
For example, sometimes I don't like. There's a filter I have. I just remember. Sorry, but I think it will be valuable information for people. Sometimes you have to decide if the size of the big candle and the inside candle really works. Like if it really. How do you say that? Let me think. If you get a 20 pips big candle and a 6 pips inside candle in a 4-hour chart, of course, depending on the pair, but for example, if you get that on the pound yen, on the euro yen, it's pretty easy to get a 50 move on that pair, so it's really easy to get stopped out on a 20 pip trade on a 4-hour chart.
Right. Yeah.
I don't have a specific number. I just like watch the chart and for example, right. Let's say the euro yen. I think I might have an example right there. For example, here this small candles right here. You can say that this one was an inside candle to go. This red one, you know. But that means that the previous candle was a well, it was a 50. I think it was going to be smaller. But sometimes you just get like small inside candles that they it's not good to go just because it's too risky because the move can be just blown up.
Yeah, and some
So
people get excited
sometimes,
about those because the stop is so tight, and you have a tight stop loss, so you can trade more lots. But what you're saying is that you actually kind of avoid those.
yeah, yeah, because of course you can. It's not about being greedy, you know, because if you get you say okay 20 pips stop loss, that means I don't know, 3 lots, 4 lots, whatever. Of course, as soon as you get 100 pips in profit, you're pretty much 5 to 1 on a really big trade, and that's going to make your account growth really good. But it's really probable that in a small candle, price just go triggers and came back and stop you out, you know?
Yeah,
Like sometimes I would like to see some room there for the candle to go and not to choppy and bounce around.
yeah, yeah. Again, coming back to this idea that really what you're trying to do here is identify a trend. The only reason we have indicators on this chart, guys, is because we're saying when we get the crossover, we know that that's a classic traditional sort of indicator of a trend. I mean, it makes it physically on the chart. You see these moving averages crossing over, and that's what people say, okay, we're in a trend. Now, obviously, when you see it chopping around, that happens all the time. So we don't have that, not every cross is going to be a new trend, but we do know, and that's why Jorge says, look, if I'm getting these crosses, an up cross, a down cross, an up cross, he's not going to jump in. He's got to wait for the market to really show its hand here, like it did here on the euro yen, where those two candles went for, I don't know, 400, 500 pips. Those two candles how far did those go?
Look, 340 pips,
Yeah,
pretty much.
340 pips. So you're talking about 170 pip candles. That's not normal on the 4-hour chart, even on the euro yen. It's more like an
Yeah,
average of 60 pips or 70 pips, not 180, 170 pip candles. So the idea here is that we want to wait for a trend. Jorge will wait as long as he has to when he gets a signal until it hits where the stop loss would have been. Once it hits his stop level, he cancels it. He adds to his positions when he's at risk-free. He milks them for all they're worth. So, this is all about being patient. We don't know that it's really good on the 1 hour or the daily. We just know that for me and for Jorge, the 4 hour is ideal because it allows you a good number of trades, but it also allows you to get away from your computers. You don't have to sit and watch, every 1 hour candle print, right?
yeah,
And the good thing is,
absolutely.
yeah, the indicator will tell you, the indicator actually, when you get the indicator from the forum, which let me post it, it is actually, that indicator is actually going to send you an email if you want when, or an alert when the moving average changes. So if you're in a trend and you've moved to break even, when the moving average changes and goes a different color, so if it goes from green to orange or orange to green, it can send you an email alert and say, hey, check it out, pound yen has now changed color on the 6 EMA, time to get out, that sort of thing. So that's what's really cool about the indicator, guys. So I hope this is good for you, and I hope it really helps.
Yeah, me too, me too. I really appreciate people, all the people that start following the thread on the
On the
forum,
forum.
and
Yeah, yeah.
yeah,
So
it's amazing.
Yeah, so Jorge's got a thread. It's on the Naked Forex Now forum. Let me post it here. Basically, here's where you can get information about the 2E if you want. We'll probably have Jorge back for another webinar just to answer more questions. We'll also have the thread right here that Jorge's posted on Naked Forex Now forum, which I'm going to send through here right now on the here's the thread right there. So I just posted that. The indicator's been posted. You can ask him questions on the thread. You can also join the Daily Trader. Jorge's now been posting trades on the Daily Trader. The Daily Trader also has several videos about the system, so you can see more in depth. But the idea here is basically for everyone to see. It's all free. It's all out in the open. You wait for an inside candle after you see a nice strong cross, and you go for 1-to-1, move your stop to break even, and go for a big profit target. Okay, so yeah, it's a great system, says Mary. Yeah, so this is a lot of people are really happy with this, Jorge. I'm really glad that you were able to come here today for us. Thank you. That's awesome.
No, thank you for attending. Look, this is what I say about. Sorry, just a thought I had because I was watching the charts. If I find another inside candle here on the pound, I would like to go higher. If not, if it starts going lower, it started becoming a mula. So that's saying me that maybe it will not go. So I would look for that, for another inside candle here on the pound, same as the Australian Aussie right now. A bounce of the 21 moving average, it just print this inside candle. I don't like to trade it because it's still too close to the 21. I would prefer to see another inside candle up here where the moving average are wider, so they are saying that the trend can keep going.
Okay, that makes perfect sense. Cool. Excellent. Thanks for showing us. I really appreciate it. If I actually have another webinar to go to right now for everybody that's in. Yeah, no, it's cool. No, I just wanted to say, for those of you that are in the personal trading program or the Daily Trader, you have a link there for you. I emailed it to you, so I'll see you in about 2 minutes, guys, in the other webinar. But in the meantime, I want to thank Jorge. Thank you very much, Jorge, for spending time here today. I really appreciate it.
No, thank you for having me here.
Andy says it's a great webinar. Vaughn says thanks for the great info. Nathan says thanks. Frederick says thanks a lot. John M. says thank you, Jorge. Good stuff, Jorge, says John R. Worth it to get up at 3 a.m., says Hori. Hori says he got up at 3 a.m. and it was worth it. That's awesome. Good one, Greg.
Thanks for being here at the time.
Okay, thanks a lot, Jorge. I really appreciate it.
No,
thanks, guys.
Thank you. Thanks, everybody, for being here and just sharing my knowledge. Hope you like it.
Bye, guys. See you in the other webinar if you're registered for that. And see you, Hori. And bye, Jorge. See you later, man. Thanks a lot.
Okay. No, thank you.
Okay. Bye, guys. Bye.